Good morning, everyone. Welcome to the Eurotrade. I'm Marcus Doherty, your host. I've been trading for 18 years, 12 years out of that I've been trading for various prop firms, and I specialize in some of the more unusual products such as rare precious metals and also the energies market such as Arbob, and yes, crude oil occasionally, and also heating oil as well. So let's have a look at what's going on today. Now, with these news of Russia sanctions tightening, I do feel we might have some risk-off sentiment on the day that started last night, actually, towards the end of the day. So we'll see what we can do here. Now, everything you see and hear today is for educational purposes only. Bruno has posted a risk disclaimer in the chat, so make sure you familiarize yourself with it. Don't blindly go into any trades you see here. This is not a copy trading service or anything like that. So if we're all on the same page, let's have a look at the larger time frames of crude oil and also Arbob as well. So crude oil touched the nearest weekly demand area, and then with these news, it obviously reacted to the upside. For now, there's no sign of this slowing down, and it is unusual to see crude oil move overnight like this. So if it can get up to over 61 on the day, that is definitely going to signal a risk-off sentiment and an outlier day. Now, with risk-off sentiment, you have equities usually that go down, and then risk products like gold, crude oil, basically energies markets going up. I see that copper is also trying to follow that. It's already breaking out into an extension of the initial balance upside, leaving some single prints behind. We can have a look at that too in a second. But just for the general overview, I have crude oil average daily range high, which is a normal statistical quantitative extreme. That's sitting at 61.15. If we manage to go over that and ignore it, that will be another sign of the market doing something unusual on the day. So I'm just going to put that on the chart. And the way I trade Arbob is that I do use crude oil levels because it is the main product that the other two are usually created from. So there's a huge correlation between the three. Probably unlike any other correlation that you see between the instruments. But on risk-off sentiment days, you expect energies and gold to keep going up, and then equities to go down. Whether that stands for the whole day or whether that focus of Russia sanctions is going to fizzle out through the day, that is something that we need to track. Right, so crude oil, average daily range high. We're obviously very far away from the NYMEX value area. NYMEX value from yesterday sitting all the way down at 58.82 on crude oil. And anytime you have the big move overnight from that area, it's kind of unlikely that you're going to get a full mean reversion. So it almost opens up good possibilities for a continuation trade. But again, you can still have some pullbacks down to VWAP and, you know, all of that jazz. So it depends how things play out today. As always, anything can happen. ACH, this is the trading world, and nothing ever works 100%, right? Let me hold the dollar. Man says if gold don't bounce right now, it will need a parachute. Yeah. I'm not sure we're going to get a parachute. So yesterday, gold stopped just shy of the gamma wall at 14,150. Again, we'll see whether that continues. I can have a look at gold. I don't think I want to do this via gold because Russia sanctions impact oil more than anything. And even though gold has been just insane. I mean, and gold for now is actually still inside its own initial balance. So, you know, that needs to change. I don't like trading anything that's still contained inside that range. And I feel that every time we try to do an inside IB trade, it's always a lot slower, a lot weirder. Price action is a little bit sluggish. But yeah, looking at gold, it's bizarrely in positive gamma still. That's kind of hard to believe, but if it's positive gamma environment, you do expect some options levels to keep bringing issues as we run into them. Not much change since last night. We still have that gamma flip area at 4100. So yeah, to me, gold is not that interesting at the moment. It might change. But for now, it's all a bit bleh. It's iffy. Jane Ann says 6150 is key. I don't see anything at 6150 actually. Maybe from just a regular sort of price action reading. But it's not really a previous day. Maybe it's a previous week high. Like, why did you say 6150? I don't really get that. I don't think any areas of resistance are going to stop crude oil if we are in a risk-off situation. So you can forget about that. The best way to approach risk-off days is to look for those breakouts to be confirmed on a slightly larger time frame. You don't want to be using like 5 minute, 2 minute, 15-second charts for that, but you know, 15 or 30-minute time frame for a breakout, and then you wait for any sort of a pullback, maybe a break of a nearby low or something. If you can find some equal lows that get taken out, that's usually a good space to try going with the day sentiment if you're expecting bullish sentiment. Context is king, as always. Now, on Arbob, we have some old levels here, so I need to adjust those. Let's have a look at where those levels are located. And I do feel like Arbob actually has more room inside it than crude oil. It is also a more volatile product. I call it the NQ of energies markets, even though it's not like super crazy. In fact, gold would probably be closer to NQ the way it's been moving recently. All right, so average daily range high in Arbob is coming up at 86.80. So I'm going to recycle this one. Just give it a different name, and then we'll have a marker. So again, if that gets ignored, maybe a little bit of a reaction off of it, but I would expect that to be ignored eventually. Do we have anything higher up? I think I would want to target actually a little bit higher, 189 for this purpose. But we'll see what happens around this area. Right, if you are interested in where NYMEX values are, again, very far away. At the moment, we're like 2.65% away from it. So value high, 81.54. And you know me, if you've been here for a while, I am usually short biased on the energies markets, but not when there's Russia sanctions kicking off. 80.35 is this one. So very far away. You can see that it's like miles out. And then to the downside, if we do get pullbacks, ADR low is sitting at 82.68. Do I have that anywhere? I do not. What did I say? 82.68. So yeah, even the opposite side of the average daily range is nowhere near the actual outer edge of value. So it's very bullish for now. May it continue. Yard is saying, Dee, I've been waiting for a while. Are you trading gold in these crazy volatile days? So I did try trading gold, but I'm struggling with it because I feel like I would need to use humongous stops. So I've been trying to kind of capture like movements as the market closes. But even that is like, you would need sizable stops to kind of be comfortable because I want to feel relaxed in a trade. I don't feel like I'm relaxed in gold at the moment. So I think I'm going to put gold on the back burner. And I have been trading copper and natural gas instead, which has been much more palatable and much calmer for old Granny D over here. So yeah, anytime I feel emotional dysregulation in a product, it's time for me to park it for a while and maybe come back to it when C-vol from the CME maybe falls down to about 18 to 20. Right now we're sitting above 30, which is like absolutely insane. So until that sort of pipes down a little bit, I am probably going to stick away from gold. And for any kind of metal markets, for me, I'm really starting to trade them from my midday onwards. So basically about half an hour into the LME Open, that is like my prime time to look for setups in precious metals. Now I can see that I'm just looking at DAX here. It is also going into an extension of the initial balance low, which is in the direction of the open sentiment. They tried to go up towards the value low, which is sitting at 24,360 roughly. And no, we don't have DAX on Topstep. I'm just looking at it for those who do trade DAX because arguably it is the best product for this time of day. Another one would be like FTSE or something, but yeah. All right, so crude oil is for now ignoring 6,100. And it's attempting to go above the average daily range high. So let's watch how that plays out. But yeah, I'm definitely short biased on equities today, long biased on energies because of this. Let me hold. The Dollar Man says, I found range time on Thinkorswim. I can customize it to almost perfection for anything. Absolutely obeys my levels. Wild. So range as in like, does it use volume? Because that would make it pretty pretty decent at respecting levels or breaking out of them. Because whenever you have, and we had something like that in NQ actually, which I can pull up because this is a Combine account. So let's have a look at the big volume candle. So here it was. I think it was this one, but let me drop down to a very low time frame because I can see it better. Yeah, so here it is. So for me, anytime you see massive red candles, they can actually be used as a range. I know there's a theory out there that says every candle is a range. I actually heavily disagree with that statement. I think that the big red candles that have a ton of volume inside them can definitely be used as a range reference. So here's 5-minute chart. Here's that massive red candle. And what do? Well, once we established it, the price never really got anywhere outside of it. And it went straight down to that perceivable low, faked out a whole bunch of people on a breakout. But these breakouts, for me, didn't have enough volume inside them, because look at the volume. It's not growing. It's sideways, and it's below the 20 moving average, which is not really what you want to see. But then once we came back inside it, it actually did rotate all the way back, and look at where it stopped. This is the end of the day. So this is the last sort of few minutes of the electronic trading session, or New York Stock Exchange session. So yeah, it stopped exactly at the high of that range. Is that an accident? I would argue not, because that's what we're looking at, right? So yeah, if that kind of candle ranges, it is that what your indicator that you found is doing, then yeah, why not? But again, context has to be correct. All right, let's get back to crude oil, because I want to track what's going on there. Now, if I get an opportunity in DAX to get back to 24,228, and basically I would like to see a little bit of a smash through that and then a reversal, because right now the auction is not super strong. Like, it's built some structure of 4 TPOs at the edge of the initial balance, and that usually brings, like, unless they really kind of accelerate everything, that would usually bring some sort of a pullback at a later point. So I'm still watching that as well. Now the question is natural gas going to follow this at some point? Asia has been very quiet. In fact, I would say that, yeah, crude oil is probably the most reactive product to this. Right, so we're having a bit of a reaction on crude oil, trying to reclaim ADR. Now, if that's the case, then I have to close my Arbob trade. But sometimes they kind of touch it and then they bounce back from it. The coal wall, remember, was at 61, so that kind of becomes my reference here. Let's make that white and solid. And in a negative gamma environment, you do not expect these to be respected, right? So you expect them to be run through, maybe pullbacks to them, and then continued moves. So if we manage to reclaim ADR and then subsequently also go below the coal wall via some sort of a bearish engulfing on a 30-minute time frame, that would be my exit point, because there's no, then that risk-off sentiment is not bringing an outlier day. So it's, you know, the ADRs have two functions, one of which is to figure out if we're in a normal day or an outlier day. And to be honest, crude oil reaching ADR high this early on, that's an outlier in and of itself. So we shall see. But this trade is more like macro picture rather than purely technical, right? Let me hold Dolman says, I have no idea. It just works when you find its MAs for a range. I don't know. Okay, so can we just talk about using indicators that you don't know how they function? Because I've got like a little bit of a pet peeve with that. You know, if you find an indicator that does something, wouldn't the curiosity of why it works get the better of you? Or you're like, oh, it works, I don't care. It's like, I want to know everything about that indicator. It's like, why is it working? What is it scanning for? But I don't know, maybe I'm different that way. You know, I would never use an indicator if I don't fully understand its function and the calculation and, you know, what they're trying to achieve by by doing it. Yeah, maybe it's the coder in me. I don't know. But yeah. Alchemist Oracle says, except for stocks, I've never had much luck with crude. Looks like a good trade on RBOB. So crude oil is a fickle one because it's, I call it, it's a double-sided product, right? So on most days, you're not going to get this move, right? This is like I said, more of a macro trade than anything with the risk-off sentiment because of sanctions. This is why we have to keep an eye out on the news or squawk service of some sort. But usually what trips up equities traders and stock traders in crude oil is that, like, once you have a stock in play, it's pretty insane. Like, it just goes on a run. Now, with futures, and especially commodities, they are very double-sided, most of them, unless they are index futures. And that trips people up because there are certain points of the day where crude oil loves to turn around. So it's definitely a short bias product. Like if we go through the monthly chart, right? So let's go to the monthly chart. And you look at everything from the end of COVID. Now, this was an outlier. You don't even see what happened before. Because what happened here is that we had a huge smash, because it only goes from like April 2021. But during COVID, we had a huge fall in crude oil that took all of they took crude oil down to negative. And according to how I was taught, crude oil can't, like futures cannot go negative. And actually in the Series 3 guide, study guide, they still say that. They're like, futures can never go negative. And I was like, really? Really? FINRA? Because I've lived through something quite different. So yeah, whenever you see, you know, this sort of an uptrend, this was just like a heavy reaction from basically negative futures just to get it back to some normality. And then it sort of stabilized in 2023 and became a snooze fest. Like literally from about February 2023, this is where crude oil becomes a very, very different product. You can see that the prices become more spiky, and this is a monthly chart. You shouldn't have that many wicks on the actual, you know, you shouldn't have this many wicks on the actual monthly chart. Maybe like on an hourly or 30-minute in a range day, but this is painful, right? So I was actually a crude oil trader for like full, I don't know, about 10 years. And then 2 years ago, I started to struggle with it. Why? Because we had ranges that suddenly fell below $1 a day. Whereas for all of the other 10 years when I traded it very heavily, it was actually moving between 300 to 400 ticks, so $3 to $4 per day consistently. Like, you know, having a 200 tick day on crude oil was like, it's a bit slow today, you know? So yeah, and then some days would go massively bonkers. So it would go like 600, 700 ticks. And during COVID, it was insane. There was one day where it fell 2,000 ticks in one single session. It wasn't even across the whole day. It was like literally they opened and it just complete meltdown moment. And why? It was again more of a macro picture where during COVID, China stopped all travel. China accounts for 15% of crude oil world demand use. So when that was removed, obviously we went into like an extreme version of repricing. And that's why it happened. So we understood why it was happening, and it was a pretty fun product to trade, despite all the horrendous things that caused it. But yeah, I did like the volatility. That was my best year ever. And then after that, they stopped. They just stopped crude oil trading. So I had to find alternative alternative products. And luckily, I still had gold. I still had, some of the other metals. I still had DAX that was still trading. But yeah, it was a good time. Definitely a good time. Right, crude oil tagging the high again on lower time frames. There it is. Arbob following. So we got 100 ticks there already. That's pretty quick for this time of the day. So we will see. And very little drawdown here. I don't know if I went into like 10 ticks drawdown, which again speaks to a very strong intention of the buyers. Travel Arkin, I don't know. Kind of hard to understand if you do not know or where the value is coming from, but good point. Yeah. Oh, you found a GEX profile indicator. Okay, let's try that. Let's see how similar those are. No, they don't have it on copper. Do they have it on gold? Don't know. Don't see it. Do they have 0 DTs on gold? No, this is going to be just on equities. Yeah. Only index, stocks, and funds will be available. So that's no good for me, because I'm not a core equities trader. So thank you for the suggestion, but maybe if you only do equities, that indicator might do it for you. This is also the reason why I stick with Mon-Thurs, because they are, I think, the only company that actually looks at options outside of the equities and funds. Alchemist Oracle says, remember crude going negative, crazy times. Was more options and stocks during those times. Yeah. Oh, dude. Okay, I'm not even gonna go there. Why aren't you rich yet? Yeah, because it's not because you just found it. Like, I'm just gonna warn you here, okay? If you think it's that easy and that that indicator is always going to work, I'm gonna guess that you are a relatively novice trader. I'm just gonna guess. Because if you have been grappling with the markets, yeah, you will know how and why I would say that. So yeah, let's just move on. All right, I mean, there's nothing really for me to do here. It's all behaving itself. We have gone into another higher high. How is the price action looking on lower time frames? I mean, this is very strong. The very first pullback that happened, it did create some minor low. Would it be enough to have an established swing for pullbacks in the future? Probably not. So yeah, whenever I'm looking at how bullish the market structure is, I would look at the composition of the pullbacks, and if you have deeper pullbacks, they are generally easier to trade. But, I suspect this is going to be one of those days where we're just going up, up, and up on crude oil. Yeah. And so far, Arbob is following. And the reason why I went into Arbob over crude oil is because on crude oil, around the time when I kind of entered, which was literally just before I went in the show, went to stream the show, went in the show. Crude oil is only up 55 points from there, whereas Arbob is double the amount, so it's 100 ticks. So it's a product that is definitely slightly bigger range. And Arbob has been very quiet since the rollover. This is the first day. Obviously, we livened up last night, 1 hour before the electronic close because of the Russia sanctions. But look at this. This was the entire NYMEX session, so very snooze-festy, so I haven't been trading it much. And then again, this was NYMEX on the 21st of October, so you might have gotten like a range trade there or something, because the neutral day fade looked like small scalp. But yeah, it was like very flat. Here's another one, completely flat, just like a barcode if I've ever seen one. And then same thing. So yeah, since the rollover, it hasn't really had a day where it actually traded well. So this is the first time that we're actually moving, and this would be a nice surprise. But yeah, this trade, if it carries on, great, but I would probably pull it off. This would be a time stop for me. So I would hold it until probably about my 1 p.m. time, so that's an hour before NYMEX opens. Because usually during NYMEX, you can have, especially in the first half hour, you can have something called the head fake, where the price action goes the other way. And it happens a lot. Like, it happens probably like 70% of the time, you will have some sort of a head fake for the first half hour. And then it kind of decides where it wants to go. So I don't want to be caught up in that. And, we're still on this product trying to flirt with the ADR high, whereas crude oil has ignored it. So I do think it's going to be pulled by crude oil. But if the correlation between the two starts to slow down, and I do have a coefficient index on here to track that. If it starts to break down, then it will be my time to exit. But right now, they're basically a factor of 1, which is very high. All right, so what's everybody else trading today? And just don't say NQ, please. Do I adjust the stop loss at all? No, I absolutely despise trailing stops. They've hurt me a lot more than anything, because I would, like, over the years, because remember, I've been at this for nearly 2 decades. And in the first 2 years, I heard about the trailing stop protection. But what used to happen to me is that it would always come back to test my entry. And then it would carry on in my direction and all the way to my target. And then for me, the trade location would be gone, and I would just be sitting there with nothing. So over the years, I just learned not to mess with stops, that it's just better to commit to the risk and just let it do whatever it's going to do. Now, obviously, if you're doing 50 trades a day, you can't do that, right? I do 1 to 5 trades per day. And if the first one gets me 2R, I'm done on the day. I literally just walk away. If not, or if the first one kind of was a scratch or maybe a minor loss, I will try again and again and again until I get to maximum 5 trades on the day. And then if I'm still not up, that is my time to bow out for the day, because I'm probably not reading it well. But the way it works with me is that the first trade might be a loser, but then because I'm patient at waiting for the second one, I get the better trade location, and then I run it for an even higher risk reward. So instead of targeting 2R, suddenly I have 3R availability, and that kind of pulls my day back. that just works for me. But I can sit on trades until the cows come home. And I know that's a rarity. That is my strength, but also my weakness sometimes, because sometimes I will be sitting on trades too long. And that's why I have time stops. So instead of me kind of wanting this to go to infinity, wherever it is at 1 p.m., I'm going to pull it off. So, yeah. So price-based targets only, for me, it never worked. And also trading stops I stopped doing when I was left with zilch over 5R as a swing trader that I was aiming for back then. And these days, because it's intraday, anything over 1.5R multiples, I would consider a good intraday trade. So we'll walk away. If it's a range day, then I will have more scalpy trades. But even then, I think the most trades that I've ever done on the day, and that wasn't on one product either. It was like across 5 different products. So I traded DAX in the morning. Then I traded some metals towards like midday LME time. Then I traded the energies markets between sort of post-Hanoi cut into the euro close. Then I traded some equities from the US market towards the end of the day. So it was like literally like 4 or 5 products in there. And I did do 26 trades on the day. However, the day was like a really odd one where everything was range bound. So I kept like bouncing and finding trades. And it was actually one of my biggest days, bizarrely. Not the biggest day, because the biggest day that I've ever had was like, looking at Twitter, you know, I would say that now it's nothing spectacular, but it was 86 grand on the basis of Iraqi conflict. So they basically shut down some oil refineries. I noticed a single print. I went into crude oil and it just ran up massively. And the more impressive part about that is that I was only in with like 3 minis. I wasn't even in with like massive size. It just kept going, man. Just like, so yeah. And this kind of smells like that, but it's just the sanctions. So I'm not expecting crude oil to be up at like, you know, 700-800 ticks, 1,000 ticks a day. I wouldn't be surprised to see Arbob at about 500 or 600 ticks. I mean, it's where are we at now? Let's have a look. Yeah, because we're up already on the session, 246 ticks on Arbob, but crude oil overall just 107. So Arbob, you could say that it's 2.5 times roughly faster. But it's a smaller, you know, on a one lot, this is $4.20, whereas crude oil is 10 bucks. So it kind of evens out, right? It's like more liquid, but also less expensive. So yeah. What's my bias on silver? Well, it's a commodity as well. So if gold begins to go into risk off as well, it's probably going to get pulled with it, but I'm not really seeing either gold or silver. Like last night, gold reacted to the news and it just pumped and pumped and pumped all the way up to the gamma wall, and then it stopped. So today I'm just seeing a regular day, if anything. So we have the established, we're still inside the Asia range. So we established the Asia range low, Asia range high. Let's go up to a 30-minute time frame. And silver is following that at the moment. That's why I'm looking at gold. So where were we? Let's have a look at times. Here we go. So the low, like it just looks like any old regular day. It's bizarre. And then this is effectively overnight, because Tokyo ends an hour before, so Tokyo high was here, but we wicked through it for Eurex and then came back down. But let's just put that as an overnight high. And to me, we're now accepting the Asia range again. So now, if anything, silver looks very similar. If anything, I'm expecting some rotation through the Asia range. Now, I am going to look through some lower time frames here to see the composition of this structure. Let's make this a bit bigger. I mean, we have these lows here. Now, gold, remember I said yesterday, if we end up moving away from this demand area, that this might as well be a bounce of gold. And I think we are, I mean, maybe we go into another long, but right now that's not really showing up as an unusual day yet. Things may change though. So let's have a look at silver. Silver, similar situation. You know, I would say that it's less crazy. So we're trying to create a morning star. And on large time frames, you can look at those, right? But it's basically one big move down into a nearby demand area, then a bounce. We had some volume POC there. On large time frames, POC is actually a pretty good area to get involved, especially if you can justify it by some sort of a demand that was created over there. And now we are going into a new high. So if this previous day's high manages to not cause us issues, we're already slightly above it, then I would expect some more upside as the day progresses. Now, that probably won't happen now, but it may happen, you know, closer to LME open or into COMEX. Maybe post NY cut and Euro close brings us a bit of a wobble down. But then ultimately, I would expect this rejection to continue for the day. So I'm a little bit bullish on silver, definitely, because of this outlook. But yeah, with intraday, you have to time those very well, especially when it's already this high up. So yeah. Oh, I can hear the dogs. They've woken up. All right, so Arbob slowly but surely moving in the right direction. Copper ready to blow. Yeah, I would also be careful with copper today because it seems to be following gold. So let's have a look at copper. Beautiful trade, by the way. I love copper. So let's just see where we are. So copper, COMEX, a bit higher than what I've got here. So 99.84. And then we have value low, 97.60. Whoops, what did I do? Where did you go? It disappeared on me. What did I do? What did I do? Okay, let's do that again because I don't know where that line went. It got lost. Let me try and actually type things in. So 97.60. So very far away. I mean, the copper is still in a range, right? So she's still ranging. Whether this this day with Russia sanctions actually brings us some new developments. So 4-hour chart breaking outside of this high. Now, where was the previous day's high? Right around here. So no, all the way down there. This was the previous resistance area. So yeah, I mean, we've just gone into a breakout effectively. So yes, there is a range up here. We do have a thinner volume, even on larger time frames higher up. Because if I do this, we're still inside this big smash. And eventually I would expect that to get taken out. But is that something for like right now, today? Probably not. I would expect to see like CPI or PPI data bring us into that area and take us through it. And we've already had one pop into the low volume node, and we expect it to basically react the opposite way, which is exactly what it did. But on the second and third try, we expect the price to keep pushing through what is effectively a single print, because low volume node and single prints, they're very equal. They're basically the same concept. Just from a slightly different point of view. One looks at volume, the other one looks at price, time, distribution. But yeah, very similar. So right now we're hanging above Tokyo high, overnight high. It just went. So to me, this would be a breakout however you spin it. And is it gonna keep going higher? Depends on how copper reacts to this news. Right now I'm not seeing, like I said, I'm not really seeing metals being super reactive. The most reactive product is crude oil and Arbob. Maybe even heating oil. Yeah, heating oil is following the other two. But copper seems to be slowing down right now. So we'll see. We'll see. Right now, it's a little bit iffy. And we've already come up to the expected implied volatility. So for me, even though copper is strong, we had one area of high volume. So that is at the moment something of interest. So we had two areas actually, but let's go down to a 15-minute chart. Yeah, this is all pretty strong. I mean, look at this volume. Way outside of the norm. And then, can we pick one of these? So yeah, basically with these high volume candles, like this one. Oops, I just removed that. I did not mean to do that. Luckily, it's very easy to get it back. What do I need? I need a crosshair, actually. Here it is. So this area is causing some trouble here. So let's just mark it. So this one wasn't a like it wasn't the biggest candle. There was a lot of volume churn there though. So right now it's being supportive. So if we manage to melt down into that area, I would probably want to just maybe get some shorts in there or see some shorts. Whether I'm going to get involved in it, I'm not so sure. But yeah, and then at that point, it would signal the perceived failure of the auction. So yeah, I don't really know whether it's the right time for this. And then, yes, we are far away from the value areas, but to me, you see where VWAP is. My Eastern European side has decided to appear today. Eastern European side. So you see this VWAP here. Now, if they get down there and they bounce from it, that would be a neutral day type at that point. And then that would limit my profit expectations to the middle. So not ideal. But yeah, we are kind of floating around IB high right now and around this area of previous high volume on a low time frame with a lot of volume churn. Then we had another one that was a short here, but I don't know, this all just looks a bit sketchy to me. A lot of inside bars and stuff. Like if it's gonna go higher, it should have done it already, right? And it's not to say that it might not happen later, but I think this is like that weird period where metals are just like really quiet. Because it's like, yeah, we're not trading this right now. We're gonna trade it when LME opens, where we can sit and be very quiet and just go. Because that's how LME ring trade works. It's very, very civilized. Amazing. Let me hold the dollar, man. You're very emotional. Like you are kind of at the moment your commentary there, it sounds like you're at a football game or something. Come on, your professor, up, 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 big pullback first. Come on, cheap gold, copper. It's like definitely think you're more new to this than some of us, because that sort of emotional roller coaster is not going to serve you well. I'm just saying this with the best intentions possible. If you're getting elated about the possibility of price moving that brings you profits, that's as much of a problem as going on tilt. and losing control because things have not worked out the way you wanted them to, and then getting angry, frustrated, revenge trading, trying to get it back. It's all a part of the same thing. It's your primal brain running the show, not your rational brain, not your prefrontal cortex, which is what you need. And, so less emotions. I don't like the saying, oh, leave emotions at the door, because no one can really do that. But you can, rather than shuffle all of that excitement and feeling of elation and anger and frustration on the red days, you need to channel that into something physical, like either weightlifting, going for a run, anything just to stop all of that, because it's not a good thing. And when I worked in one of the firms in London, we had somebody who had a bad day, and then they kind of stepped away from their desk, stood up, which was unusual because they were usually very calm. But I don't know what happened. I didn't think anything drastic happened. So maybe they were just on tilt that day. Maybe it was a range day. They kept trading and it wasn't working. And he got up and then he went outside. And then he was in the lobby, I think, or somewhere. And he suddenly we heard, "Rah!" And then he smashed the wall. So yeah, we don't want to be that trader, do we? Trader Dream says I'm short in gold, at least to Asia high. Yeah, I mean, could get behind that. Where are you short from? Because, I mean, really, the idea of short in gold would be closer to the gamma wall at 41.50, maybe even slightly above it, and then, coming back down. So if you manage to swipe it from somewhere there, it's amazing. Okay, I'm fighting not to move my stop for take profit on ES46 ticks. Well, I'm not seeing any, like, there will be pullbacks. Are you, like, it depends. Look, I mean, we all trade in a different way, right? Now, my targets are usually quite a bit further out. That makes sense. So, me moving stops when I'm only 46 ticks in profit, that will barely like cover my initial stop. Like it would be like 1.2 R maybe. So yeah, for me that would be something to consider. All right, so I'm not liking this ADR high reaction here, so I'm going to close it, and then I'm going to keep trying to buy this as long as that that becomes a game for today. So basically risk off sentiment, buying on pullbacks, but keeping minding the levels that we are running into. And at the moment, ADR high is causing some trouble, and I'm seeing a little bit of decoupling, just a little bit of decoupling between crude oil and Arbob. Crude oil still looking very bullish, but it's a slower product, so it's like meh. Yeah, so with the fighting of, grabbing the take profit, I don't think you should be fighting the risk off, because risk off is something that's usually an outlier day. So usually there's more downside to come. I'm not seeing anything until we get to 6,700 on ES. Does that mean it's just going to fall straight there? Probably not. So there will be some pullbacks, but it depends. Like also usually for any sort of trades that I'm doing, the way I'm getting involved is that I'm getting involved in like almost always is going to be the supply and demand area. Very like today, this was more of a breakout trade, which is why I'm also kind of not going to hold it to infinity, especially when we have a reaction around ADR high is one of my rules. If we have a reaction around ADR high and that starts to break down, I need to pull the trade off. It's a OODA loop, OODA loop, observe, orient, decided, act. And that is in constant flux throughout the day as I'm in the trade. But it depends on the quality of your stops, like and your entry, of course. If it was just like a really crappy entry and you're expecting that that's strong enough to hold to infinity, that's probably not the good choice. And yeah, you should pull it off. But if you entered somewhere, around 67.50, well, that's usually strong enough to withstand any pullbacks, and it should make you more comfortable. But if the entry wasn't that great, if it was a breakout trade, then yeah, I mean, unless you get that move massively in your favor, that's going to be a tricky situation to keep holding, right? Because it's uncomfortable. You're like, oh my God, it's still so close to my entry. Oh gosh, should I take profits? Oh my God. So it's definitely a matter of situation. Like the trades that I'm most comfortable in are the mean reversions, where I identified some sort of a low of interest, and it's like a very relevant low. It's either going to be like the previous day's low or Asia low or something, and then I'm kind of swiping it, and I get a very strong push. Like you get like some single prints on the other way, immediately like shooting up, and that's supported by volume. I'm very comfortable in those trades, and I'm like, don't really care. But anytime I'm in a breakout trade, I'm not panicking. I'm not like, oh, I'm fighting the urge. I'm just looking at the levels. So it's like we get up to a level. Do we have a reaction? If we have a reaction, I pull it off. Can always get back in. If I'm not seeing a reaction, it just kind of melts through it, I will keep it, right? And then if we are away from the area and then it kind of squiggles back down, I will see that as an opportunity for a pullback. Maybe IB high, or, some single print maybe. So, for example, on crude oil, we do have some single prints left behind. Call them FVGs, call them whatever you want, but in market profile, they used to be called as single prints. So if we go back down, sub 61.29 here, that would mean we are testing single prints. And at that point, if there's not an immediate bounce there, it means we're going lower. So where's the perceivable low? Here. It's all the way down here. So it could, if this does start going back the opposite way, this is where crude oil is very difficult, it will tag 60.39 like easily, and sometimes in one candle. Like one big 150 tick candle. It just melts, right? It melts. And that's why people are like, well, what happened? We were in an uptrend. Yeah, it's a product with a short bias. So if at any point they come out and say that the Russia sanctions are not that bad, and they'll be like, meh, actually we're just kind of amping it up a little bit. But on the other side, we are discussing with the president and whatever, immediately crude oil is going to correct back to where it started. So what I do in those situations, I will kind of try to look at the structure and look for any kind of meaningful lows. And this is intraday view. And then I will look for those lows to be taken out. But very frequently, I'm actually pretty good at figuring out the reversals up top. So I would, and that's where I would consider myself aggressive. I know that people have different ideas of aggressiveness, but to me, I will pick a top in the right situation, but it has to be contextual. It has to be something around either the gamma walls or maybe stronger GEX levels. Time of day is a huge factor in crude oil. And then, taking out of the single prints. Then I can kind of read it on the way down. But it's not because I've got a crystal ball. It's like literally because I'm reading the single prints being chewed up, and then time being for this thing to come down. Am I going to do that today? Not yet, because every time they try to sell it back into the nearby single prints, somebody buys back up. So until that price action F's off, to be nice, I'm not interested in shorting. Also, these wicks, it means that every time we drop, somebody buys it. Every time we drop. Until that goes away, I'm not interested. So yeah, for now, the way this looks, it might be an idea for a call wall to get tested and then another long. And then when crude oil does that, I may want to find a trade in Arbob again. So basically outperforming the underlying, but doing multiple trades in the same range to the same side. That's what pullbacks are for in an uptrending market today. So we shall see. Have you ever tried natural gas? I've traded natural gas for 12 years now. So yes, but natural gas is very seasonal. So you have usually, I think, February, March, April, they're pretty good. And then around about this time, as we head into November, it starts to liven up. So yes, yesterday I did a mean reversion long on natural gas because the demand is kicking up from the macro side. And then there was a big mean reversion opportunity, so I took that. But yeah, for certain times of the year, natural gas is a good product. Other times of the year, it's like watching paint dry. I would rather go stick pins in my eyes. Okay, so Alchemist Oracle says I'm more of a scalper. Yeah, so then just take the profits, man. Like, you know, it's a different style. Gas prices, Trading Nichols says, good to see you, man. Well, gas prices locally were 10% lower than I ever really see. I really wanted to buy the dip in my gas tank, but my car tank is full. Oh, yeah. ST trades, just got M&Q 25.1110 down to 25.04. Nice work, very nice work. I do think we have space down to 25,000 as well, because not really seeing much. But if there's an Asia high, sorry, an Asia low here. No, not really. Asia low is much lower down. So yeah, I think we have quite a lot of space down. Thank you. Ever trade the grains? No. I think I maybe did like one wheat trade. So the grains person in Topstep is Coach Hoop. Like he is somebody who has traded corn and wheat and soybeans, and he trades cattle as well. So he is very alternative markets for me. Very alternative. Quite a bit different markets. So yeah, they are very weather dependent. I could never. It's too much work, man. Too much work. Like anytime, like for me, macro for me is like 30% of the time maybe I'll do macro trades that, you know, are supported by technicals obviously, but they are based on a macro picture. With any kind of grains and cattle and like ags in general, you really have to pay attention to the physical supply and demand and to the weather conditions for crops. And yeah, it's just not something I ever did. I spent most of my time on the energies desks, and then I traded metals as well. But I have more experience trading energies, even though both are now getting to a point where it's like such a long period of time. So for example, I've traded crude oil for like 12 years solid. If we take in the fact that I started trading it in 2013. And then gold, I started trading about 10 years ago. And then I started looking at like I traded platinum. I did trade platinum before, but copper was a new one for me. Copper was like 2 years ago when crude oil started kind of sucking intraday. I wanted to find something that moved for this time of day, because we were supposed to have DAX, then DAX didn't come, and then it was a bit of a tricky situation because precious metals don't really move until LME, obviously. So I was looking for something that could have some sort of movement, and copper was actually pretty good for a time. Like today it's moving. Okay, so it's trying to fail the auction, but now we're getting some buyers on copper. Actually, that looks quite interesting. Let's have a look. So I'm just going to pop an initial balance marker here so that we know what we're looking at. Initial balance, so 8 o'clock was here. There we go. Now, some people would say, oh yeah, this is a failed auction. What's the volume doing? So is it, like, how much energy is this thing going to need to actually fail the auction properly? So I think this is just a pullback. But let's have a look at low time frames. I mean, wow, yeah, to me this is very strong. I don't even see a pullback here. Like the biggest pullback is this one here. Oh boy, yeah, look at that. All right, so if we, let me look at the profile, developments. What is happening with profile here? Okay, so building structure, this is a slower auction for sure. It is to the upside. Okay, that's not telling me much. Let's have a look at 5 minutes. The volume has just died completely upon the return into the initial balance. Don't think this is a true failed auction. Yeah, it's gonna be a continuation. Let's give it another 18 minutes, see how this happens. 8 seconds, sorry, not 8 minutes. Just so that we can get to a 5-minute bar close. Yeah, I mean, that's holding. What about volume profile? Let's see, on smaller time frames. Yeah, it's pretty thick as well. Okay, so maybe we want to buy it. Just maybe. But I would need it to retest 507.20 maybe. We'll see if that can happen. Just to get like a bit of a better entry there. And because it's a slower auction, these pullbacks are more likely. Let's have a look at time. Actually, no, I've got a bookmap on the other screen. Sorry, I'm just muttering to myself. This is what I do when I'm alone as well. I'm like, and then my husband will be like, "You talking to me?" And I'm like, "No, just talking to myself." Okay. So what I'm trying to do is we have this little high here, and then I'm trying to get like a 2-minute time frame quartile low of this entire swing just to get a better risk profile. Because right now I don't really want to trade outside of this. I just want to trade inside this little range that we established. And the delta is not telling me much. It's like mildly negative, minus 160. And what size would I need here? I'm going to go with my usual sort of 35 ticks on copper. And because we already have some profits, I'm actually going to go micro here just to control sizing a bit. Right. Let's give that a go. Now it is on a micro, so it's not going to show up here. But it will show up here. So let's see. Well, this works. There's the spread. There's always a spread on copper in general, so I have to take that into consideration. And let's see if we can get back up to the high of day here. Just watching it. Yeah, spread was a bit horrendous there. It's like 5 ticks of spread. Yikes. It does get better during the day when it comes to spreads. All right. So let's see if we can snag another few ticks to the upside here. First order of business, it needs to crawl back outside of the initial balance. If it doesn't, then we have a case of this going flat and sideways. Yeah, it's a bit quiet on copper actually right now. Let me get this to a bigger resolution on Bookmap. Right, so now we'll wait and see what happens. How did I learn trading? What books or courses, please? It was kind of a mishmash of a whole bunch of things. My very first success was with supply and demand swing trading. So I did that for the first 5 years since 2007. And I did really well with it. So I thought, well, I'm actually pretty good at this and I want to get into intraday futures. Couldn't do it by myself. It was very difficult for me to figure out how intraday worked for some reason. I mean, it is a difficult thing to do anyways, arguably the most difficult thing you will do in your life. And then I talked to a friend of mine because I lived in an area in London where there was like a lot of bankers and traders, and it was like around the back of Canary Wharf, effectively. East India Quay, those yellow buildings across what used to be the Millennium Dome and now is the O2 Arena. And then he went, you know, have you, because I never thought I was going to be a trader. I was a session musician, rock and pop musician for many years. I have a classical flute training, and then I went into saxophone and electric guitar, and I did that for 20 years. And I actually ran 2 careers concurrently. As I was leaving the music industry, I was starting my prop career as well. But yeah, so the first thing that I did wasn't a course. It was a friend of mine who immediately taught me to use a stop loss, immediately taught me how much risk I should be doing, higher risk reward on trades. Like literally I was set with some rules that you should never really break. Like, you know, I would never trade without a stop, for example, because that's not serious. Yeah, so after that, let me think. After that, I figured out that there was a range in the day. Like in every day, I would be, because I'm very systematic, like just by nature. Everything I do, it's always, you know, it has to have flow diagrams and stuff. And if I can't explain a trade to myself, I shouldn't be in it. So my playbooks are very well defined, but nowadays it's kind of a combination of multiple concepts. So the second thing was me noticing that every day that I'm looking at the markets, there is a range. Like something moves 120 ticks, then 150 ticks, then again 120 ticks, then 160 ticks. So I thought to myself, did somebody figure out a way to make this like into a readable level? And how do we do that? And as it turns out, there was an ATR, average true range. So that was the second concept that I then sort of flipped around to read average session range. So it's like my version of it, where I'm looking at the RTH, regular trading hours, over the last 10 days, and that kind of becomes my reference for the session. Very useful on days where the markets go absolutely bonkers in one direction, and you're still looking for some sort of a range. Well, upon the start of the next session, you effectively have a new level of reference for the range of that particular session. So even today, if crude oil just carries on higher, once NYMEX kicks off, I'm going to have another reference. So that was the second concept. Didn't go to a course for that. It was just like pure experience, just me noticing something and then seeking out an indicator that would show me that to automate the process. But for the average session range, I had to do it through Excel spreadsheet. So every day I would pull the tick data, put it in an Excel spreadsheet, calculate my levels and then put them on the chart and then track them, because they are dynamically tracked, sort of like a volatility band, but based on the average daily range. Does that make sense? So yeah, and then after that, I went for an apprenticeship firm in Chicago. That's where I got introduced to the concept of volume profile. Now, that was a bit of a game changer for me. I was like, wow, you mean you can like actually track what's going on intraday? And that kind of put me on the path to get obsessed with everything profile, which then carried on. But for the apprenticeship, I did pay a lot of cash for it. So it was an apprenticeship paid for, and then at the end of it, you would get a funded account. So that was the first funded account that I had. And then, I don't know, about 2 years on, I was back in London, and then I was looking for a Chicago-based prop firm because I liked the way they were doing things, because it was like the hub of prop trading, and they were doing things right with all the metrics and stuff. And then I found Topstep because I was looking up remote Chicago-based firm, and the only thing that came up was Topstep. So anyways, I became their first female funded trader in 2015, got invited to do the interview for Squawk Radio back then. So that was Eddie who was doing that. But then I suppose they liked how I was talking and whatever. And they invited me every so often to be a guest on Squawk Radio. And then I got to meet Hogue, because Hogue was our risk manager at that point, which was lovely. And he was always amazing. Then we started chatting. And then he was running the Market Profile Lab. But I didn't have to, I don't think wasn't it paid for service? No, I think you had to pay like something like $75 or something. But yeah, so I signed up for that. Even though I was a funded trader, I just felt that Hogue had so many parallels to like my own trading and the way he was looking at the markets. I wanted to know more. So yeah, so I learned a lot of profile finesse points from Hogue. And of course, we're still different traders. You know, we are, he has his way of doing things. He uses open interest a lot. I use the options levels. I know he uses options levels, but more from like a weekly time frame point. That's where weekly kickoff levels come in. And they're amazing. Why? Because it's Hogue. He smushes a whole bunch of things together. He smushes things like the weekly option expiries, support and resistance, market profile, and then comes up with this amazing weekly kickoff price points. These amazing, because there's two of them, isn't it? Yeah, so after that, I mean, that was pretty much it, right? The options side of things, again, came from Forex for me, because there was always like this thing called the NY cut, post-NY cut, and that was a big thing in Forex. But then I realized there's like a knock-on effect. There's always something that happens around 10 a.m. New York time, and then a reversal. So that became even more pronounced in crude oil and gold, because that's a behavior that we see a lot. If the post-NY cut immediately doesn't give a reversal, then the euro close will. So there's another opportunity there. And it just became like something that I looked at every day. I didn't even think about it as a concept until such time that Mentor Q came along, and they suddenly gave me all of these levels without me having to look at the options chain. So I'm like, oh my God, it's amazing. Because I always used to use the call walls and the put walls as a magnet for my post-NY cut trade. It's like, well, if it gets to here, then it's definitely, a stronger situation and a stronger argument for a reversal there. Because that's a magnet. This is expiring, so we're going to have a whole bunch of volume from the options. But then you have the futures options that usually expire towards the end of the day. So now 0DTs have gone massive, right? So everything is sort of in a constant flux. I wouldn't say that I paid for much education at all, but the first apprenticeship, that was pretty expensive. That was like 20 grand. It was crazy. So yeah. But it was like a 2-month long thing. It wasn't, oh yeah, come for 3 days and then off you go. And you did get a funded account at the end of it. So for me, it was almost like going back to school, because I came from a completely different non-financial background. And I decided that was the right thing for me. I wanted to learn from professionals, and I didn't want to do it by wasting a whole bunch of time watching free videos. I wanted concentrated sort of structured content that will give me the information that I needed. So I found that. There we go. But nowadays we have TopstepTV. You know, we have a lot of free education out there. And yeah, there are courses. There's a lot of garbage out there, but there's some really good courses. Like Merit Black has a pretty good one. You know, there are people in the industry who are very good teachers as well as traders, but there's a lot of people who are very good traders but sucky teachers. So, you know, each to their own. Yeah, very often if I let a trade go into New York from a very pre-NY entry, I'm like, well, of course you shouldn't be in it. Yeah. It's just because of that intra-session behavior where we are basically seeing, let's say London takes it one way, then New York takes it the other way. Asia comes in and takes it yet another way. Like there are causes for continuation, but more often than not, you're going to get this like intra-session chase. I call it the Tom and Jerry chase. Cat and mouse chase. Why? Because in the cartoon you had the cat chasing the mouse, and then mouse would do something really, really clever, and then he would turn around and be chasing the cat. So that's kind of like, you know, they chase each other. Kind of like my dogs, you know. We have Crichton chasing Bernard, then Bernard chases Crichton, then Crichton jumps on Bernard's back, even though he's tiny, but then Bernard lets him. And then Bernard with his 13 kilos jumps on tiny Crichton, and then Crichton takes it because it's like, yeah, we're playing. So yeah, it's intra-session behavior. So if you are wondering why all of a sudden at like the start of NYMEX you lost all the profits, it's because of that. Little nugget there. Opinion on trading psychology. Okay, so let's do that. Let's make that the last question. Yeah, so yeah, Merritt was a big crude oil trader, yeah. How do you get your volume profile all the way to the right? I think it's the standard. Oh, no, I know what it is. So you have visible volume, visible range volume profile, and fixed range. So they're two different indicators. Fixed range goes to the left like this. So let me show you. So if I were to just make a volume profile, it goes on the left, right? But if you use the other one, which is the volume profile visible range, there it is. Let's put a star there. That one will print on the right. So this one is kind of time-based. You can effectively put it to be almost like a TPO profile. I'm really looking forward to the day that we get TPO profile in here, because I mean, I do love this platform for its like simplicity and clean, but it's just the tools. We're still needing tools to come. So fixed range. So for example, if I wanted to see the current day's profile, which I don't really read all that much, I prefer to look at pure price action and initial balance for this purpose. But let me just illustrate a little bit here whilst we wait. So basically the value area would be, in my colors, would be this this yellow. So we're kind of dead in the middle of it. This is why I said this is a slower auction. We've built a lot of structure on the way up, and we only have a tiny bit of the low volume area at the very top. So this is why I thought, well, that's probably game. Like if we're bullish on the day, that's probably game for the takeout liquidity grab sort of play, stop run and reverse as we used to call it back in the day. But yeah, it's the difference between the fixed range profile and the visible range. So hopefully that helps. Now, opinion on psychology, last question. And could Topstep move your live stream to LME opening hours? We're working on it. We just had some new people joining the team. So it was supposed to happen, but then we ran into a bit of a snag. So yeah, at some point this stream will be moving, and it's going to have a rebrand and a new name, and everything's just going to be closer to LME open times. But yeah, so anyway, psychology. If your current methodology is not good, it's either got too many models, that's a part of it, that's not a very good thing, or it's just not working consistently enough, or it only works for one type of a market, like a trendy market, and then stops working in a range market. I think you need to work on developing a more robust approach rather than, oh yeah, let me deal with my psychology, because most of the time when you sort out the flawed strategies, suddenly you find that most of your psychological hang-ups are no longer there. Okay, so if you don't pay attention to the strategy part, you will be struggling a lot to say, oh yeah, my psychology is great. What good is your psychology if your current strategy has a negative expectancy because of whatever, right? It could be, you malfunctioning. It could be, usually it's a strategy where you're basically doing breakouts into very suspect levels, or not reading the market on the day and thinking, oh, it's a range day, but it ends up being a breakout because we're going above or below the Asia high or something like that, and you don't recognize that, and you're thinking, oh, they're going to fade this. So, just general sort of market structure skills of reading what is happening at the moment. And once you sort that out, maybe you can look at psychology. And then there's a guy called Jared Tendler. He's been on TopstepTV. You can look at the concepts of A game, B game, C game, and then figure out during the course of the day what triggers you. So even if you're, trading is flawless, what triggers you? What are your mental triggers that causes you to slip from your A game to B game to C game? And then also what drags you back, right? So what sort of things can you do for yourself? Is it having a ham sandwich, like Hogue says? Is it lifting some heavy stuff, like Dee says? And, combination of the two. Yoga Nidra. Anything that can, tone down your sympathetic nervous system and bring the prefrontal cortex back into engagement. All of that you can track through a very simple idea of A game, B game, C game. And then over time, once you have both things sorted, yes, you will probably find that you can never get rid of Muppet moments altogether, but you can minimize them to the point that they're not as harmful. And most of the time, the other side of things, so you keeping your stuff together for like 6 weeks before you malfunction is actually usually enough to keep you going as a trader without kind of massively blowing up every single day. So yeah, but tackling psychology before you have a robust methodology, I'm not really in favor of that. I'm going to end it here. Yeah, so let's have a look at what Thursday brings. Now, don't forget, today we do have natural gas storage release. That's going to be 3:30 p.m. my time. What is that in? I think it's 9:30. Is it 9:30 a.m. Central? Something like that. So let's see what that brings. I will probably stick away from trading natural gas until that's over. In fact, I've actually locked off my live until that time anyway. And we will see what the metals want to do. Some slight indication of maybe longs stepping back in, but gold really, really needs to tackle the 4150 area if we're going to go higher. That's all I have for you today. Thank you for joining me. This was a very pleasant session, so thank you very much for spending time chatting and generally keeping each other accountable and ready for the day. This was the Eurotrade. I'm Dee. Have a great day.